What is up, ladies and gentlemen? We are going to be going over the charts. This is the Crypto Savvy channel. I am Craig. We are going to be talking about Bitcoin, BNB, XRP, Dow Jones. We'll go into it all towards the end of the video, but first we're going to take a big look at Bitcoin. Before we begin, if you guys would do me a huge favor, smash that thumbs up and share the video. Also, if you're new to the channel and you like the content, make sure you subscribe, and let's get into it. So looking at the monthly, right, we have nothing but lower highs and lower lows. I think we have a new lower low coming. There is a chance of another push up. We talked about it in yesterday's video looking at the wick off. If you have not seen that, watch yesterday's video. I'll leave it up top. But let's look at what's going on. So as you can see, the October that everybody is talking about does not seem to be playing out. I think there's a good chance it will be a downtober in a big way. We've been talking about this for a very long time. I want you guys to all be cautious. Remember, none of this is financial advice, but I am out here to try to help people understand charts and markets and how they play out. No matter if it's pet rocks, Bitcoin, Dow Jones, doesn't matter. Markets are markets, guys. So let's take a look at what's going on. So I do believe this is going to most likely end up being a red candle. Something I want to talk about. We will be going into the small time frames too. I want to show you an Elliott wave count and how to get that count. That's just another lesson in the video. So, but let's take a look at some monthlies here. For instance, let's take a look at this monthly candle right here from 59,000, right? We're looking at this one. It dropped all the way down to 42, which is $17,000 in a month. Let's take a look at another candle. Let's get this one out of here. Let's take a look at this monthly candle right here. And that is from 59,000 all the way to, where's that at? 29. So $30,000 in a month. Those that think Bitcoin cannot crash hard here haven't been around long, or just are just not paying attention, just blinded by hopium, something, right? Guys, I just want to give you the other side of the coin here. I know everyone's super bullish. Everyone believes in the 4-year cycle. The 4-year cycle has been squashed since it dropped below 20,000, which was the last high, right? It's over, in my opinion. Believe what you want. Try not to be negative. You will end up losing a lot of money if you stay negative and don't look at both sides. So just be careful with that. So this is the distribution phase we talked about yesterday. If you want more detail, watch yesterday's video, like I said. But the bullish case is we could get up, break this high a little bit, but that's still being just distribution for more downside. Also, we could be topped out here. But again, I'm in the camp, we're topped out here. But there is a chance we get up, get one more push up. But I'm going to show you. I know a lot of people don't like fractals, but I'm going to show you one here in a minute. But before we do that, here is a word from my sponsor, PrimeXBT. Definitely check them out. Links down below. You can use my promo code SAVVY50. That'll get you up to a $7,000 bonus. SAVVY25 gets you 25% off your fees. Definitely check them out.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.
All right, guys, here it is. Here's their new feature. You can go trade global markets. You can trade whatever you want on this exchange. They don't trade against you. They are a book exchange. I made a video describing a book to B book. But if you have not checked them out, there is contests you can join for free, so you don't have to actually risk any of your own funds. There's copy trading, lots of things on here, but definitely check them out. They added a new feature here that is more for the cross leverage trading instead of the insulated, or I'm sorry, it is more for the isolated rather than the cross. But definitely check them out, guys. Awesome exchange. All right, so this is the chart I want to talk about. A fractal. People don't like fractals. They don't always play out, but they are a very key thing to watch in markets, right? So it can tell you a lot. Let's look at this here, just showing you. We had a higher high here, right? And then we had our drop down. We put a trend line on these two lows. Once we crossed that low, dropped down, came back up, did not quite retest it, just like we're getting here. One of the things I want to point out though is let's take we've been looking at this as a 1, 2, 3, 4. As long as this 4 does not cross the 32.9, which is this low, if it does that, it will be invalidated. Otherwise, I believe this is a wave 4 coming down for wave 5 for a new low that we've been talking about. Stick with me. So let's take a look at just this right here. We're going to zoom in and I'm going to show you how you use your fibs. So if you're looking at this as a completed 5-wave down and then you get a ABC up, we go from this low, take your Fibonacci extension, go from that low to this high, the next high. Whoops. Yeah. Did I go to the right low? Yeah. And then you go down to this. So you get your A, B, C. Your 1-to-1 extension is here. Usually that's where an ABC structure continues to the downside from there, right? So we got rejected at the 1, right? 1-to-1 extension. That's 100% from over here. And continuation down. And you see how fast and hard this fell? Very fast, very hard. Now, let's take a look at where we're at now. We'll zoom into that spot over here. Same thing, completed 5-wave structure, right? 1, 2, 3, 4, 5. And then an ABC correction. Let's put our Fibonacci extensions on there. From the low, which is right here, we go up to the next one. There's a high right here. Go down to the low. We'll take a look at this in the 4-hour too. And if you look at where it got rejected there, let me zoom in for you. The 1-to-1 extension, perfect rejection. Now remember what happened here after that 1-to-1 extension. And I remember the 48K. Everybody was screaming new all-time highs by the end of the year. Guys, you got to remember, I've been calling this for 2 years. If I'm off by a little bit of time, it doesn't really matter, right? 2 years ago, I called this whole structure. I even called for a false bottom, then a 100% rally, which is exactly what we got here. But look how fast it fell from here. And guys, one of the things I always stress is make sure that you're following traditional markets. A lot of these crypto gurus do not have any true market experience. They don't watch traditional markets. They don't understand how markets work. They just think Bitcoin's going to miraculously go to the moon. Institutions are buying in. Guys, it's the same narratives over and over. It's getting kind of old. It's just a market, right? So we'll see what happens here. But let's get into the smaller time frame. And we're going to look at an Elliott wave count here. So where we're at right here, this is, let me show you exactly what I'm showing you in the 4-hour chart. What I'm showing you, this is a daily. What I'm showing you in the 4-hour chart is this coming down right here, right? Let's take a look. So if this is a wave 1, a wave 2, right? We have our ABC correction. Wave 3 should, let me get this off of here. And I'll show you how I'm getting the count, right? And again, not to say this is done and this is the exact count, but let's, first off, we're going to start from this high, go to this low, right? And we're going to take our Fibonacci retracement. Let me zoom in so I can get more accurate here. So we're going to go from, take your Fibonacci retracement from this high to the low. And we got rejected at our 0.5 fib. Now, there's always a chance you could get up to this 29.3, which is the golden pocket zone, even as high as 786. And then that would change the structure. Not so much the structure, but the count. But if we've topped here, right, topped out there, we take our Fibonacci trend-based fib extension, and we take this wave 1. We start our fib there. You go down to this low. So that's the end of wave 1. Then you go up to the tip of this 2. And that'll give you, if you look for a This is a normal Elliott wave count. So if you look for the wave 3, that would be around the point or 1.618. That's usually where 3 stops, although it could go further, right? So then we would get, now this is all assuming that we get down to this level, right? Then we would look for the bounce area. So let's do that. Once, if we get to 3, then you would put your Fibonacci retracement, go from the top of wave 2 down to the bottom of wave 3, and you look for areas of rejection. Usually, if wave 2 is a deep correction, then wave 4 is a shallow correction, and vice versa, right? So if this was to happen, we get down to 17.3, may get a bounce up. Your first fib level would be 19.9, then you have 21.2, then you have 0.5, right? And then you have, of course, your golden pocket, and then your 26.2 would be your 0.786, which I don't think it would go up there if we get down here. So let's take the 0.236. Look for a rejection there, right? Then we take our Fibonacci extension. We go from the top of wave, or I'm sorry, yeah. We go top of wave 2, bottom of wave 3, top of wave 4, and then we would look for these areas, these Fibonacci areas for wave 5 down. The first break of this would be around 15.9 and 14.6. Then we'd have our golden pocket at 13.2, then 0.786 at 11.4, then the 1-to-1 would be 89, and then we have 59, and then we have a super low one down here. So anyways, what I'm looking for is plenty more downside. But remember, if we are in one of the distribution schematics, we could still get a another boost up. And if we do, then I would look for these areas for shorts, right? We have been in a bear market, still in a bear market, in my opinion. Nothing has changed. Sorry, guys, my throat's a little raspy. Anyways, nothing's changed. I'm still expecting everything to play out. If you guys haven't checked out my bubble pop theory, watch tomorrow's video. I'll go into more in-depth detail of that with some other bubble pops and show you why bubbles usually return to where they began. Now, the DXY, as you guys know, we've had this target here forever. We hit it. And I told you, once we break it, if that holds as support, we have much higher to go, bringing Bitcoin and traditional markets down more. The biggest money grab in history. So now where's our support? Our support is this trend line now. This trend line's from way over here. We have measured moves all the way up to 115. And in the bigger picture, if we go to the weekly scale, we have much higher targets, much, much higher. Now, if this continues to the upside for years, months, this could be a long, drawn out bear market. Could take a lot longer. Not to say the bottom won't be in quick, but it'll be a long, slow grind up. New all-time highs for Bitcoin in the next 2 to 3 years, very unlikely. Not saying there's not a lot of opportunity and a lot of money to be made, though. Let's look at BNB. As we've been talking about, once we lose this 202, your next target is 153. And then if that breaks, 69. If that breaks, Binance is done, in my opinion. XRP, the pump and dump hype coin of the century. Guys, just keeps getting lower lows, right? Or lower highs. Told you this would be X'd out way over here. My targets start at 25 cents all the way down to 4 cents, depending on how bad this bear market gets. But honestly, I don't think this XRP is going to go anywhere. Now, Ripple itself could be a decent company, could go somewhere. The technology. There's no use for XRP coin, though. They can put any coin on the Ripple network, so keep that in mind. Most of the XRP army bought up in here and up in here. They have no choice but to hope and pray and be bullish. They've lost a lot of money and will continue to do so, in my opinion. All right, Dow Jones. As you guys know, we broke down here like we were expecting. This is your next bounce area, 32.9, which is your 0.382 fib here. Anyways, the big targets 27, 27.7, and obviously I think we can go much, much lower. We broke the daily trend line here on the RSI. It's not looking good. S&P, we still have not broke down out of our rising channel. Once we do, my target for a bounce is about, and I mean big bounce. Of course, there's going to be little bounces, but I mean a big bounce around 37, 35. I see us going as low as 27. If that breaks, well, it's bad, bad news. The biggest money grab in history means they're going to be taking everybody's money out of the market. They're going to have their money in the dollar, put it in the dollar. Dollar is going to rise. Markets are going to drop. When the markets hit the bottom, they start piling back in the market. Dollar comes down, market goes up. Super simple. It's been happening for hundreds of years. It's pretty simple how the people in power stay in power. And once you realize that, you can quit fighting them and play with them instead of against them, right? NASDAQ came back up, retested our rising channel we broke out of. Next big target, 12.4. And then, of course, much, much lower after that. This could be a big ABC correction. Let's put the fibs on that. Go from this high to this low to this high. And look for the 1-to-1. Whoops, what happened? That's not what I wanted. Trend-based fib extension. Here we go. Go from that high to the low to this high. Your 1-to-1 extension is going to be, and then it could also go to the 1.272 if it gets really bad. So there it is. That's what I'm looking for, guys. Still, if you look at this too, it looks like a huge bubble pop pattern. If that's the case, we come all the way down to these lows. We'll see what happens there. Be careful. Be cautious. Love you guys. Make sure you smash the lights. Leave your comments down below. And I'll see you in the next video. Have an awesome day. I will try to be active on Twitter a little bit. I haven't been very active. Still got stuff going on with the landscaping around the house now. So that's what I've been up to. Thanks again for watching, guys. Leave your comments. I'll see you in the next one. Make sure you subscribe. Watch tomorrow's video. We'll go over the bubble pop pattern.